RBA Homes is out with their annual report for the year to December this morning. The company's full year headline earnings per share amounted to 2.16 cents. That, of course, versus a loss of 4.94 cents in the previous year. To take me through more, I've got David Wentzel, CEO of RBA Homes. David, great to have you with us. It seems like RBA has managed to shrug off the woes of the past, swinging to profitability, of course, for the 2011 year. Just looking at your operating profit, coming in at 14.2 million rand, that, of course, almost matching the loss that you made in 2010. Just run us through the key drivers of the improved performance this year.
Yes, that's off increased revenue of 176 million compared to the previous financial period of 105 odd million. Due to increase in sales, we've seen a Standard Bank joining in with a finance for our end users. So hopefully this year, ABSA and Nedbank will follow suit as well.
So you've got Standard Bank lending to the affordable housing segment. Of course, FNB has also been quite aggressive in that segment. Is this a space that banks are finding quite profitable to enter into? What type of risks do you see banks attaching to lending to the affordable space?
Well, we see credit extension increasing. We're still at the lows of previous financial recoveries for the last 60 years. So we see a probably good 3-4 years of credit extension increasing. And the affordable housing market is a good conduit for that, for the banks to play from a social point of view as well.
So let's just focus in on the cost side of your business. Of course, costs have been quite well managed, but of course it is seen to be quite a tight margin business. Run us through what your margins are sitting at right now and whether they're in line with targets.
Well, our margins have remained constant throughout the last 5 years probably. We increase margins because we do our own construction, in-house construction, in-house sales, in-house infrastructure development, and then the top structure development. So the margins aren't the problem, it's the volumes getting that through. Now, clients are still indebted. We see the household indebtedness slowly coming down, so we think that the next couple of years will be good for our business.
Let's look at the pipeline in terms of this year. At the end of 2010, you had 379 equivalent houses completed. That's just a gauge of overall houses. Then, of course, that jumped up to 613 by the end of 2011. Looking forward to this year, can you give us a rough idea of what you're looking at in terms of growth in the number of stands that you're looking at to develop?
Equivalent houses is firstly just the houses that we started off in the beginning of the year under construction and what we had on the books in construction at the end of the year and what registered during that period. So as you rightfully say, we did 613 for the 2011 and we're aiming to do between 900 and 1,000 for this year. In addition, we'll increase our rental portfolio as well. We've got another 148 units under construction and we're looking at rolling out the next phases as well.
Talk to us about the strategy with regards to the rental side of the business, because looking from a revenue perspective, the amount of revenue you make from the rental side is equivalent to around 5-6% of the the revenue from the property development side. So still very small, but what type of targets do you have in terms of this? Is this an area of the business that you'd like to grow more aggressively in to have perhaps a higher percentage of overall revenues generated from?
Yes, we would have liked to have increased that substantially already, but with funding being a problem, throughout the financial crisis, we're seeing the market starting to thaw now towards funding for those rental projects. Our first one is literally 95% occupied and payments made. So we're happy on the back of that we can get further finance through the National Housing Finance Corporation and Gauteng Partnership Fund. So we've got about 2,000 units which we can roll out over the next 4 to 5 years.
That will be dependent on these subsidies coming through and, of course, banks.
Well, we don't operate in the subsidized area at all. Our end users get 100% home loans through the banks, and our funding for the bulk funding for the rental projects, as I say, come from NHFC, so there's no subsidies linked to that.
So what impact then does government's perhaps support in the housing subsidy space have on your business model? Because recently announcing that anyone who earns 15,000 Rand salary qualifies for a subsidy, surely that would have some kind of impact on RBA.
Yes, when the NHFC rolls this out, it will now be individual subsidies. So any person purchasing a property and under 300,000 with the income below 15,000 will qualify for once-off capital subsidy amount. So we see that as hugely positive. We're just waiting for it to be rolled out probably later during the year.
From a dividend perspective, no dividend declared this year. Of course, gearing is still an issue for the company. The cash generative position of the company has still been problematic. What are you doing to address the cash management position of the company, and do you expect to resume or start dividend payments in this financial year?
Well, we generated 16.5 million worth of cash in 2011. We're obviously sitting with a lot of debt on the book still, which we will utilize this year to work that off. And then probably in the next financial year, if there's free cash, we'll start looking at dividends.
Okay, so we're looking at it, what, 2012, 2013? 2013 right now. David, thank you very much for running us through the numbers. David Wentzel joining us, of course, CEO of RBA Homes.